Good afternoon. Happy Friday. This is Gabe Velazquez, transparenttrading for a Friday, 17th February. Welcome back, everybody. Hope everybody had a great trading week. Let's get right into it. So a couple things. As usual, subscribe to the channel. Let people know. I want to grow the audience here. We have a free newsletter that we publish. You can link that below. You can spend 5 days with me for free. And I have a class scheduled for Thursday, this coming Thursday, another class regarding some swing trading opportunities, extending your time horizons and doing that because day trading is, as we know, statistically very, very challenging. So if you want to sign up for that, please do so below in the one of the links there as well. Okay, let's get right into it, everybody. So we had a hotter than expected PPI, as everybody knows, on Friday. Prior to that, the S&P, let's focus on the S&P. Everybody should be pulling up your charts, your bigger charts here. Essentially we were 4,100, 4,200 for, last several weeks. We did finally break today. Now we are coming in short the S&P today. So we did short the S&P yesterday, right on the near the close yesterday. So we're short the S&P. That's doing well for us. We're looking for about 100 points from where we shorted that. We're up about, we're up a lot more earlier today, but the market did come back. The Dow kind of a very interesting mixed set of markets today, with the Dow up, the Russell up, NASDAQ down, and S&P down. So very interesting. Now we do have also TTWO in terms of some of these tech stocks that we're in as well. But all in all, very, very muddled, confused market. You can see that reflected in the overall. I mean, even like a day like today, like the Dow's up, NASDAQ's down a bit, and a lot of the NASDAQ stocks are pretty much not going anywhere, and then the S&P down. Energy was down today, so yes, generally just a malaise in the markets, but still opportunities, right? And so just to kind of sum up the day today, today was kind of options Friday, and essentially kind of in another tight range, 40.60 to 40.80. If we regain 4,100 next week, we do have a holiday on Monday, everybody, as you guys know, President's Day. So stock market will be closed, but we will have a futures market. I think 4,100 now becomes the old support resistance right now. So we'll have to see how that goes in that regard. And what's interesting is I spent some time with my members this morning, kind of tracking the SPYs, the spiders. And if you pull up the spiders, SPY, really interesting that the spiders, which again are the derivative ETF of the S&P 500, are holding rock solid at 404. Pull it up on the chart so you can see that. And so that's really interesting. Clearly, we're going to need to break 404 in the spiders if this market's going to continue lower. If that does not happen and we come back up again, then I would say we're probably still range trading, and there's a chance we could go right back up to the 4170, even 4200 at some point next week. So that's really kind of where we're at. On the the YM is just in a big old range, pretty much, right? It's big, massive range here, 33,500 to about 34,400. Big swings, lots of chop, kind of challenging. Russell, interesting again, is holding 1925 is a nice support level on the Russell, and we also have resistance now forming kind of at 1970 on the Russell. So those are the levels. If you're looking to trade in these markets, that's kind of where we're at. Also, because of the hot PPI number yesterday, we've been talking about, it all kicked off from the huge jobs number, a couple of weeks ago, right, where the bond market really sold off, and it continues to sell off, albeit at a slower pace. So what happened was interesting today is we broke on the 10-year, which is what I've been mainly focused on. We broke below 111.26 and a half. You guys can see that clearly on the charts. That was a pivot I've been writing about and talking about. We broke below that this morning, and I think what helped the stock market is also we regained that back, closing at 112.01. So that was interesting, and I think that is why the Dow and the S&P really didn't move any with any kind of gusto to the downside. So if bonds start rallying here, we actually we're looking at buying TLT for our members. So we have a setup on the TLT to go long right below 100. Put that trade out today. So we'll have to see what happens there on that. But again, still bonds are still going to be the key, with what's going on with the Fed and everything else. So we still have to look at the bond market to be driving everything. And clearly today, the fact that the 10-year did recover really did prop up stocks, I believe. Okay. Similarly, the dollar, again, the dollar was raging this morning, broke above 104, traded all the way up to 104.70, and then also pulled back as rates came off a little bit. And so this is also going to be important. Clearly, the currencies also creating lots of volatility with this. We've been mainly focused on the peso. That did surpass the 54.01, the 54 level. There are some levels higher that we're looking at in the peso. That's really all the currencies that I'm trading right now, because that's the only one that's moving. Everything else is really just kind of mired in this big chop all over the place. So, that is what it is. And so we, basically have to adapt to what's going on in the current market environment. All the rest of currencies really not a lot to talk about, really. Also, gold and silver, we're still in a silver trade. Gold did recover off the pivot. There's a pivot, 1829. And there's nothing there. There's a really nice level right around 1925 on gold, if you look at the chart. But gold has kind of just been all of the currencies kind of mirroring what's going on in the the dollar. So a lot of kind of just muddled gyrations going on as well in there. And silver, it's got to break 21 really as well. So we came down close to 21.17, and then held. So I think we need to break 21 on silver to really get that thing going. There's some really nice levels in silver to the buy side down in the low 20s, but that's obviously a long way away as well. Also, been talking about copper kind of holding around the $4 mark. So we'll see if that actually gets some, again, it's also very choppy, kind of tracking the dollar. So that's something to look at as well. And then oil similarly, not doing a whole lot. Energy stocks really got beat up today. So a lot of rotation, lots of stuff going on. I mean, there's also kind of a mixed looking under the surface. Airbnb rallied hard after earnings, gave back about 13 points of that. And we've got, a lot of retail companies reporting next week. So it's going to be, again, more more of the same. But overall, I mean, if you guys have been tracking this, I mean, there's still some opportunities, but you got to be very selective and you got to be nimble in this environment. That's really what it comes down to. So oil did attempt a little bit of a bounce out of 75, but again, nothing dramatic, no real follow through. So it's going to be interesting to see how that plays out. Nat gas, we were in a range. We talked about this. We were basically range trading between 233 to 265 in nat gas. Finally broke down today. However, momentum is really slowing down, which doesn't mean it can't keep going lower, but it's not like it's, kind of fallen off. It just keeps meandering, if you will, kind of this meandering move lower, which is really interesting. So they could continue to move this lower. We're still in a really tiny position in Boyle. I think I talked about that. We have a much broader stop. It's a very small position, so we could weather this. If nat gas drops below 2, then we're going to be out of that position. But it's going to be a really tiny loss. In fact, we're only risking like $160 on that trade, so it's a very, very small position. And just nat gas is really an interesting commodity because again, everything that everybody expected to happen that would propel nat gas higher has not come to fruition, right? We got very, very mild winter in Europe. They overstocked, even though, again, here in some parts of the U.S., including myself here in California, your energy bills are just skyrocketing. And so it's kind of puzzling, kind of baffling to some folks that, your gas bill has gone up by 200%, and yet nat gas is like sitting almost near the lows from 2-3 years ago. So, but that is reflective of that's really kind of goes to this notion that markets don't necessarily track Main Street kind of thing, right? And so, anyways, we'll see. Clearly $2 is going to be the next area if it does hold. I mean, we're sitting at 226. It's been a very kind of grindy, we kind of pause for a little bit, going sideways, and then take the next leg down. Every leg down looks like it's losing some momentum, but again, doesn't mean anything. It just doesn't want to go up. It goes down gradually, but it nonetheless, it's still going down. So be interesting to see what happens there. So grains again, soybeans in a range. What a surprise. 15.25, 15.35. Wheat in a range, also. And what else? Corn, similar. So nothing really to talk about in the grain markets. So all in all, just a challenged environment where most of the opportunities we're finding at TTS is actually in individual stocks right now. So, we're short S&P. So, there's still clearly some opportunities there. If you're taking them a little bit longer term, and if you catch them, but as with every economic report coming out where the market is really ultra sensitive, this can change in a heartbeat, as we know. I mean, even yesterday, if you were trading in the S&P, we had that hot PPI number. The market sold off and then came right back about halfway between the range. Again, we were sitting in that 4,200 range, came retraced about half of it, then stalled out, and then just fell off. That's where we actually got into the short in the S&P. So, but anything can change, obviously, and it is very, very tricky market all overall. So you got to work a little extra hard to find opportunities, but they're still there. Okay. Uh, yeah. So listen, again, I think I'm going to do, there's not a whole lot that I haven't covered. I mean, if you really think about it, has the market changed? I can sit here and blab all for the next 15 minutes, but really, um, you know, there really hasn't been a bunch of change since the last time. Um, uh, in fact, the S&P, the Nasdaq came right down to 242, and it's trying to head back right back up again. But if you draw a square between the highs from last couple of weeks ago and the lows from right back down to this 1224, you can see, if you trade between those fringes, if you will, you'll be okay. If you try to catch those on the top end and the bottom end and avoid the middle, I think that's really the strategy right now. If you are of the notion that you want quality levels, well, maybe you just trade the support and resistance. That's kind of what's working right now, if you really think about it. Okay. So, anyways, listen, I'm going to get out of here because there's not much else to cover. And again, I do have a class coming up on Thursday. So if you want to, I'm going to be looking at some longer term opportunities and futures, and I may even go into options and stocks there. Again, trying to get people to, move away from this lower kind of probability, lower statistical day trading, short term stuff, because we know statistically, yeah, you're going to have your wins and losses, but statistically, that is not a long game. Most people that make a lot of money in trading, in fact, if you've done some research lately, you read books like The Turtles. I think there's bandying about some of these long term hedge funds and whatever. They hold on to trades for longer term, so that's something that you might want to consider. Um, and aside from being very very active. So all right. In any event, have a great holiday, everybody. Again, just no stock market on Monday, but we will have a futures market. So we are in several positions. We are short the S&P, so we'll be tracking that. Still didn't hit our target. We came about 30 points from our target, so we're just going to hang on to that. But we do have a free trade in that. If you want to learn what we're doing, again, sign up for 5 free days in our morning session. And check out what we're doing. If nothing else, that's it. Okay, everybody, have a great holiday. Have a great day off. If you're not trading futures, then you can take if you're going to trade futures, you still got to watch on Sunday, because the futures will be open probably quietly, but you never know these days, right? So, in any event, have a wonderful weekend, everybody. I'll see you next Tuesday. So have a wonderful weekend, and I'll see you soon. Okay. Take care.